Successful traders always follow the line of least resistance. Follow the trend. The trend is your friend. That's a quote from Jesse Livermore, regarded by many as one of the greatest traders ever, American investor. And Jesse was right in that regard. Follow the trend. That's what we do here at Charting Wealth every single day. Appreciate you being with us. If you don't have our book, it is available in the show notes. We'll talk more about that as we go along, but let's jump into these markets. S&P 500, the NASDAQ 100 up for the day. We see 20-year bonds and gold down. Let's first jump into these charts. We look at the S&P 500 on the weekly chart, and we start the week off with a bang up. Now, this is our Heiken Ashi candlesticks. And of course, what we see starting the new week off as we go into our third week after we had our weekly vertical crossover going down on the week ending Friday the 24th. Things slid sideways over the prior week according to the candle, green spinning top tending up. But this latest price movement is knocking way up. Derivative oscillator still negative. Price percent oscillator still negative. So the sentiment still negative on our big chart as far as our indicator goes, our main indicator, the price percent oscillator. But we do see it moving toward the red signal line moving down, price percent oscillator moving up. Will it cross by the end of the week? Depends on how strong a week it is. Now the sentiment still down though, and the derivative oscillator still negative. We go to the 2-day chart. What do we see there? Well, if you recall, latest 2-day candle that, well, the prior one drew on Thursday, so the latest one represents Friday and Monday. Blowing up, pushing through the 2-day trend line. Don't have a crossover yet, but getting very close to that massive green up candle heading up. We'll see where all of that leads us. Still negative over the next 2 days. That could turn positive if the market keeps going up. That 4-hour chart just up, up, up. First red candle we've seen at the end of the day on Monday. Does that mean anything? Could just mean the market's taking a breather after 1, 2, 3, 4.5, well, 5. We'll say 5 strong up days after bottoming out back in the afternoon on Monday, the 3rd of June. Up since then, blowing through the 2-day and the weekly. Keeps climbing. For the first time, though, in the afternoon, we saw the derivative oscillator lose energy, and that price percent oscillator weakened a little bit. So we'll keep our eye on things, see what there is to see. Don't have a trade at this point with all that pullback going on. Now the Qs, what do we see there? Up for the day, 1.17%, S&P up 0.46%. So we see the Qs again forming a green up candle. Price percent oscillator, however, still heading down. Can you believe that? Derivative oscillator, flat. We do see a green up candle forming just the first day of that weekly candle. We go to the 2-day chart. Did end up, when it closed on Monday, representing Monday and Friday, did push through the 2-day trend, the weekly trend line. It already pushed through the 2-day. And we don't have a crossover yet. So again, weekly and the 2-day still technically down. Derivative oscillator still negative. So we'll keep our eye on things. What do we see on that 4-hour chart? Well, as the 4-hour chart pulls itself up, we can see up movement in the morning and then about the same in the afternoon. Derivative oscillator lost a little bit of momentum. Price percent oscillator. So we'll see how much more energy there is to keep bounding up. We'll wait and see. And we'll just let things sort out. Remember, just like Jesse Livermore said, the trend is your friend. Make it simple, make it easy, follow the line of least resistance, and that's the trend. We go from the Qs to 20-year bonds on our weekly chart. And of course, we can see a pullback underway after 1, 2, 3, 4, 5 weeks of strong, strengthening up movement. We see a red open box, again, price, above the weekly still, but really weakened as far as the week starts off, down 0.94%. Price percent oscillator still heading up, derivative oscillator still gaining upward momentum, but weakening. What does that 2-day look like? That candle has finished drawing, and we see that the 2-day We want to go ahead and draw a decent 2-day candle if we can, connecting what we can connect. There we go. Connecting 3 of them, we can see that we've gone below that 2-day trend line. Although it is an uptrend still, it has weakened. Price percent oscillator's about gone flat. Derivative oscillator's been losing momentum since it peaked back on the 2-day candle on June the 4th. Really sideways slide underway. So we'll keep our eye on things. Maybe bonds are just sort of gaining some digestion at this point, getting ready to head up. What do the 4-hour charts show us? Again, sideways slide. Price hasn't moved below where it bottomed out back on Wednesday the 5th. So we'll keep our eye on things. Derivative oscillator is heading down. Price percent oscillator is about flat. So we'll watch and see what there is to see, and whether or not bonds are going to keep bounding up. If stocks keep going up, what typically happens? Bonds go down. So again, we did have a good trade in bonds, and you, of course, need to pay attention if you are still in that bond trade. You've now violated your 2-day trend line, still above the weekly, and that price percent oscillator is harping over. So pay attention, particularly if you go below the latest floor, which would have been somewhere around that 130.25 mark. So be careful there if things bound below that. But again, that's where we are on 20-year bonds. And then last, we go to gold. Gold, of course, had a weekly vertical crossover. Those of you with our texting service or who listened to the weekend comprehensive review and forecast, we announced gold did cross over at the end of the week after that super strong, gigantic gold up candle pushing through the Bollinger Band. Price percent oscillator still heading up after a bit of a pullback, down 1% for the day. A red open box candle forming. Derivative oscillator still gaining upward momentum. Go to the 2-day chart. And of course, we can see that price did manage on this 2-day candle to still move above that prior Wednesday, Thursday candle on this Friday, Monday candle. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. We go to the 4-hour chart. What do we see there? Of course, we didn't have a jumping in point because gold was down throughout the day. We see that 4-hour chart has crossed over going down, which of course then gives us the ability, now that we see a pullback, if gold bounces off that, pulls back through it, of course look for that as a jumping in point for a potential continuing trade in gold up. So we'll keep our eyes on that. That's where we are, folks, as we end the day on Monday. Again, we're in the summertime trading zone. This is where it gets sloppy and not nearly as much fun. We've been talking about since we came out of the fall-winter trading zone, which is the best time. Clean moves, moving in one direction or another, great, easy jumping in points. Why is the summertime such a sucky time to trade? Because there's typically less volume. And imagine how easy it is to spill something out of a teacup as opposed to the ocean. You can jump in the ocean and you really don't make a big effect on the ocean, do you, if you jump into it. If you splash a teacup around, it goes everywhere because the volume is a whole lot less. So the more volume, the less things have to sort of run up, down, and sideways. That's one reason the summertime trading zone is so much less fun and so much harder to find trades and things that actually work time and time again. But that does not keep us from practicing, does not keep us from trying, does not keep us from learning. If you don't have our book, you need it, Charting Your Way to Wealth. You can buy it at our website. All you got to do, well, look in the show notes. You can see in the show notes, if you get our email every day, you're at YouTube, you're listening to iTunes, you'll see a link in your show notes. You'll also find them in the show notes at the website each day where we post them. Follow that link. It'll take you to Square where you can order your book. We'll ship you an autographed copy right out. We actually have our 11th printing out, a few of the 10th printing books still left. And those 11th printings, when they come in, we'll be getting those right out also. And again, if you live overseas, need to email us, cw@chartingwealth.com. We'll get your invoices out to you, and get your books out to you also. Folks, that's where we are as we end the day on Monday and go into Tuesday, the 11th of June. We so appreciate you being with us. We always love to hear from you. cw@chartingwealth.com is our email address. Again, 10 to 15 minutes a day. That's all we ask for greatness. God bless. All the best from the whole team here at Charting Wealth World Headquarters.